Was on Sharp's Pixie this morning, and I just want to go back to what I said about gold at 27.1 million ounces that's been imported into the COMEX this year so far. Along with that has been 205 million ounces of silver, and that is absolutely enormous. And that doesn't include the amount of silver that's gone into SLV or the other ETFs, or the amount of gold that's gone into GLD and the other gold ETFs. So that demand I'm giving you is just one part of it. It's the major part, but it's just only part of it. Now, as far as what the Silver Institute reported this morning, I mean, it's no surprise here. I'll just read the pertinent paragraph here from their commentary, which will be in my column tomorrow. It says, overall, global silver demand exceeded silver supply for the fourth consecutive year, resulting in a structural market deficit of 148.9 million ounces in 2024. Notably, during 2021 to 2024, the combined deficit reached 678 million ounces, equivalent to 10 months of global mine supply in 2024. I mean, it has so much, 678 million ounces over, that's been used over what's been produced. I mean, I don't care how you slice it or dice it, world inventories of silver are getting perilously low. And once we hit rock bottom, it'll be reflected in the price immediately. We're just not quite there yet. Well, there's two sides to that coin. First of all, the moment that silver gets repriced to whatever its new price is going to be, which my estimate's going to be 10 times what it is today, so you're talking north of $300 an ounce, that isn't going to change world mine production by 1 troy ounce. Even the primary silver producers that call themselves primary silver producers, normally basically produce silver as a byproduct for the most part, like the other mines, like the copper mines and lead and zinc mines. And they're not going to change their mine plans or anything for anybody for $300 an ounce silver until it's been at that price for a long time. So the mining industry is not going to do anything, and there's lots of ore bodies out there that have all been drilled out, but it's going to take years for them to get permitted and the extra drilling done and the mine actually get built. We're not going to see any increase in supply from the mining industry for at least 5 years. At least 5 years. Because the miners, for a start, listen, just take any silver miner you want. They look at $300 silver and they say, well, let's wait 6 months and see if it's still there. Because we've all been to $50 and back a couple of times in our lifetime. And they're going to look at it and say, well, hallelujah, but let's just wait this thing out and see what it's like in 6 months. So we're looking at years and years and years before the production picks up again. And there's no chance. I'm 76 years old, and I will not live. When this thing finally hits a brick, when the supply-demand fundamentals finally hit a brick wall, I will not live long enough to see that come back in balance. That's how bad it's going to be. Now, you were talking about, and correctly so, that, somebody's going to say, well, yippee, $300 silver, and they're going to start selling their silver, and it's going to be in the millions or tens of millions of ounces or hundreds of million ounces. But on the other hand, silver going from $30 through the price rise up to $100 and $150 and $250 and $300, the retail investment demand for silver, and whether it be in the ETFs or physical silver or whatever, is going to absolutely totally bury whatever supply comes to the market, either through mining or through the release of silver through the COMEX or whatever. That stuff is just going to be eaten up instantly. So when this market finally does go, it's going to be impossible to stop, and the physical demand. Good luck trying to find something, physical silver bullion, say 2 weeks after this whole thing blows up, because it's going to be, as some people like to say, unobtainium, and it will be for years and years if you could ever get it all again at the retail level. First of all, I want to comment on what Rick said. He's absolutely right. It's like 0.5% or something ridiculous number like that. And that 0.5% is mostly gold. Okay, so silver is not even on most people's radar screen. But, for somebody who's getting started, the first thing that they have to do is they have to buy physical metal in hand. They have to get physical metal. Buy it for a reputable dealer. And they may say, well, it's $50 an ounce. Well, you want to buy it at $200 or $250 on the way up, or do you want to buy it now? I remember, let me tell you a story. I remember being at my bullion dealer in Edmonton way back in early 2000s, and I was haggling over a 5-ounce silver round, and he wouldn't go lower than $7 an ounce on it. And I was really unhappy about that. I look at back now and I say, I should have bought everything I had in the store, So $50 is like, well, gee whiz, that's a lot of money, And I look back to the big mistakes I made in my life is not loading the boat back in 2000. Okay, so we do it dribs and drabs all the way up. So at $50, trust me, $50 is going to look like a bargain of the century in a couple of years from now. So bite the bullet, go out there and buy, get physical silver first. And if you want to buy the shares, do not try to rifle shoot the silver sector at all, even the gold sector. Buy a good stock like SILJ for silver and GDXJ for gold. Those are the American ones. Here in Canada, we have equivalents, but in the U.S., those are the big ones. But buy the physical metal in hand first, because it's an asset which, the banks can't run off on a high-speed printing press. So that's what I would recommend people do if they're going to get into the silver space. Physical first, and then the shares. The biggest surprise to me, and Ted and I, did this commitment of traders report every week, and we report on the big four, the big 8 shorts. They all had names. They were the bullion banks. There were some investment houses in there too. But to see them show up with bells on, with a brass band marching down Wall Street in New York during the first 3 months of this year, there they were. You could see them all. They were all naked for you to see, the 12 bullion banks all rushing for gold. They didn't want paper. And the thing is that this is what, the retail sector and myself and your other guests and every other person that's ever been interviewed has said, do not get involved in the paper market. Do not buy the futures market or options. Buy the physical in hand. And when you see the bullion banks with the hundreds of billions of dollars they actually spent taking delivery of gold and silver in the last 3.5 months, they know something that we don't. I don't know what it is, but I get the feeling that we're going to get a reprice in silver and gold at some point. And, if all the smartest money in the world, the deepest pockets that they can print their own money, is rushing out there for gold and silver, and they're buying it by the hundreds of millions of ounces, I think it's a reasonable assumption to make that the retail public should be doing exactly the same thing as well.